Hello and welcome. You're watching Ask Me on Bloomberg Quint. I'm Agam Akil. If you got questions on equity, this show is perfect for you. Send your questions to us on Twitter, Facebook, YouTube, or WhatsApp, and you can of course also call us on 022-4540-4141, or you can mail us on askbq@bloombergquint.com. Make sure, however, that you do add the AskBQ hashtag. Before we go into individual queries, let's take a quick look at the markets. And the Nifty is higher by around 0.5%. We're also looking at gains on the Sensex by just as much. So, perhaps some relief for those investors who are long in the markets at this point in time, considering 8 straight days of losses and that snap coming about in today's day of trade. When it comes to your Nifty banking index, that is also moving in tandem with the benchmarks at this point in time, given a 0.5% gain. The 27,000 mark is still elusive, but a lot of technical analysts have now once again started talking about reclaiming that level. Moving down to your broader market indices, such as the small cap and the mid cap indices, we do have gains there as well by just as much. So about 0.5% gains coming for the Nifty mid cap and the Nifty small cap indices as well. But moving on, how are we seeing some of these stocks move in today's day of trade? Has there been any big move in today's day of trade? Starting off with Tata Steel right at the top, advancing in today's day of trade by as much as 3.6%, followed by Vedanta, which is also up as much as 3.4%. Now moving on, we also have Adani Ports and India's Housing Finance, for that matter, advancing by 3%. GAIL and Hindalco, among others, advancing. When, as you can see, a lot of the support is coming in from the metal SPAC. So keep an eye on that particular sector. And of course, GAIL from the oil and gas space is also advancing, so keeping things up. On the losing end, however, we have a lot of weakness in the likes of HUL, Bajaj Auto, Hero MotoCorp, and I don't mean a lot of weakness, but there is less than 1% declines coming in. So today's day of trade certainly is seeing a lot of gains in general with respect to some of these stocks. But on that note, I'm going to get in our experts of the day. We have a technical analyst, NS Fidai, here with us on the studio, and Vikas Sethi of Sethi Finmart here to joining us remotely to answer all your questions. Thank you, both of you, for joining us. And on that note, I'm going to take up the first query. It's from Raga, who writes to us. He has shares of Himadri Specialty Chemicals bought at 147 rupees per share. What should he do now? Hold or sell? Let's pull up Himadri Specialty Chemicals. At one point in time, of course, it was doing rather well for itself, but it has come up quite substantially along with a lot of these other stocks belonging to this very same sector. It's currently at 97. Vikas, let me take up this query with you. Himadri Chemicals now 50% below the viewers mark. What would you suggest he should do? Should he book losses, or do you think there's a possibility of a reversal for which he could wait?
Yeah, in my opinion, he could continue to hold on to Himadri Chemicals despite the fact that he's sitting on huge losses. I think the prospects of the company looks good because it's a play on the potential of electric vehicles in our country or in our economy. I think it is supposed to be the only producer with which caters to electric vehicle segment for their carbon requirements. So I think the future looks good, but the stock has been beaten down in line with other stocks in the mid cap category. But from here on, I think we could see substantial upside in the coming months or years. So I would recommend a hold on the stock.
Okay, we have a bunch of queries from Akshay Mittal, but Akshay, unfortunately, I will not be able to take more than one query because we have a lot of viewers out there waiting. But I am going to take up your query on Pidilite. You want a one-year view here, so I'll do a technical check with Mr. Fidai. It's currently at 168, when I believe you have bought it at 1100 rupees per share. Mr. Fidai, what would your advice be?
I would advise him to hold, and probably because right now in extreme short term it has given a breakdown, but as he is intending to hold it for a year, the stock has a very good potential to come down to maybe 950. If he is able to sustain that kind of levels, then he should be holding the stock. and adding more around that area with a very strict stop loss below, like 900 rupees. So.
All right, Mr. Fidai, I'm just going to take one more question from Akshay because he has a long list of stocks. The other one he wanted to know about was Radico Khaitan. Again, from a one-year point of view, he's entered Radico Khaitan at 390. It's currently at 369 odd levels in the spot. Again, Mr. Fidai, how are you reading trade on this one?
It is I think it has broken his levels actually yesterday only.
Yeah.
Yesterday and day before yesterday. So, if he can exit for the time being and maybe buy around 300 would be a better way to go about it for a longer term. If he can hold, then he will have his patience will be tested in this stock because I expect even it to go up to 280 also.
All right. Okay, there you have it. Well, the expectation that it could go to all the way to 280 as far as Radico Khaitan is concerned. But moving on to the next question, we have a question from Arun Kumar, and it is on 8K Miles software. Well, this I reckon is more to do with a fundamental view here. Arun has bought 8K Miles software at 102, and his question is, should he hold or book whatever level profit he's making at this point in time? Vikas, come in on this one. Of course, as we all know, 8K Miles software is something which has had its own share of governance issues. Fundamentally, how do you stand on this one?
And I would recommend exit on the stock. I would recommend that the investor books his profits and exits the stock, because I feel even in the mid-cap IT space, there are several better opportunities. This company has been in the news for wrong reasons. There have been corporate governance issues. So I feel one should get out of this kind of stock and should say shift to some other stock in the mid-cap category. We have a huge list of good quality mid-cap stocks listed on the markets.
All right, there you have it. Well, that's your view on 8K Miles software. When we have a suggestion that you should exit out of 8K Miles software. But moving on to the next query that we have, it's on Vishal. It's from Vishal Sangvi. He actually wants a view on Godrej Industries. Now, that of course is a holding company for Godrej Properties as well as Godrej Consumer Products as well. And I'm not certain if he is intending to ask about either of these companies. But okay, I'm just going to talk about Godrej Industries. He wants a 3 to 5 year view here. And he's invested a small amount, and he's not sure if he should keep investing, considering a low interest coverage ratio. Even if you leave aside the low interest coverage ratio, Vishal, if there is a possibility, actually I'll take this up with Vikas. Vikas, do you think it's a better idea to hold Godrej Industries, or do you think it would be a better idea to perhaps pick up some of the other listed entities under the umbrella of Godrej Industries, something like Godrej Agrovet, Godrej Consumer Products, or Godrej Properties for that matter? Where do you stand on this picture?
Yeah, as far as Godrej Industries is concerned, at the current levels, the stock looks good. But if one were to choose from among the other listed group stocks, then I think Godrej Consumer Products would give him better opportunity, because Godrej Industries, being a holding company, would always trade at a discount. So I think it would be better for him to just switch to a stock like a Godrej Consumer Products, which comes from the same group and is expected to do well over the say next 3 to 5 years. So I would recommend a switch from Godrej Industries to Godrej Consumer Products.
Okay, there you have it. Well, let's move on and take a query from Ashish Chitte. He says he's bought 500 shares of Motherson Sumi at 160. His question is, should I average out or at current levels, or continue to hold with a 1 year view? Motherson Sumi currently at 135 rupees per share. Mr. Fidai?
I would advise him to exit around 150 if it jumps up to that area, and maybe trade a bit on the lower side. And the stock has a potential to go, if it breaks below 127, it can go all the way down to probably even 95. So trading would be a right idea to do right now, rather than holding it and just seeing the stock fall like the markets are doing right now.
All right. Okay, all right, there you have it. That's your view on Motherson Sumi. Moving on to a question from Ganesh Nandure, and he says, well, he sold Yes Bank at 214, and and bought it back at 160. and he actually wants to know if it is a good move or no. He has also raised certain unethical activity. Well, I wouldn't go as far as to say that as the bank has gone ahead and done anything unethical, but there were some concerns which rose from time to time, and the bank has at least addressed two of the major concerns. One is with respect to leadership, and the other one is with respect to possible divergence in asset quality between the bank's perception and that of the Reserve Bank of India. Both these issues have currently been addressed, but I'm going to send it over to Vikas. Vikas, how would you see Yes Bank? He's bought it at 161. Do you see any problems here from here on? And would you ask him to exit Yes Bank at these levels then?
Not really. I would think that the problems which the Yes Bank was grappling with, meaning the twin problems, one of the management and the other of the NPA divergence issue, both have been addressed. As you rightly pointed out, recently RBI gave them a clean sheet as far as the NPA divergence issue was concerned, and they've been able to find suitable management in place of Mr. Rana Kapoor. So all these things have been sorted out, and now I feel the stock has stabilized at around the current levels of around 215, 220, and I see further upside in the stock in the coming quarters, coming years. I think the performance would also improve from here on. So I would recommend a hold on the stock. He's sitting on good profits, and let him enjoy the profits and ride on the next up move in the stock.
Okay, there you have it. That's your view on Yes Bank. Hold on to your position at this point in time. I'm going to move on and take a query from Desai Meet, and his question is on Sterlite Technologies. He says he's bought Sterlite Tech at 298 rupees per share. It's currently at 237.8 rupees per share, so he's looking at a little bit of a loss at this point in time. Mr. Fidai, he wants a short-term view on this one. What's your view here?
I think the stock has a potential maximum to go up to right now in this possible up move is up to 265. So he can trade there and maybe rebuy again around 240 or something. So he can recoup his losses also, and he can stay invested in the stock also.
Okay. All right. Well, fair enough. That's a valid advice coming through. And the next question is from Sunan Chakravarti, and the viewer also wants to know a short-term technical view on Aarti Industries. Let's pull up Aarti Industries. Well, there has been no mention of whether or not the viewer is in the stock or no, but Aarti Industries is currently trading at 1319. So around about 1320 rupees per share, not doing too much in today's day of trade. Mr. Fidai, what levels would you watch out for in Aarti Industries?
Like, I wouldn't be very comfortable holding this stock if it starts trading below 1280.
Yeah.
So, like, if it starts trading below 1280, then it probably calls for a waterfall again. Like, we had a very strong fall. If you see in last 3 weeks, it has fallen from 1800 to almost 1300.
Right.
So a bounce from here could be a trading opportunity, but if it breaks below 1280, it can even fall to maybe 9,000 rupees or 950 approximately.
Okay. All right. Well, on that note, we move on and take a mail query from Rahul, who writes to us. He says he has shares of AB Capital and bought at 193 rupees per share. He wants a long-term view in this. Again, I mentioned he's bought it at 193 rupees per share. It's currently trading at 82 rupees per share. He wants to know if he should hold or sell. Now, the trouble with AB Capital is that while I do speak with a lot of analysts who seem positive about the fundamentals of the company, the shares of the company have continued to fall. Now, we really would want to know what's going on with that, but I'm going to hand it over to Vikas on this one. Vikas, if you track AB Capital, where do you stand here? And would you advise the viewer to book losses at this point in time, or do you think there is a good up move here?
Yeah, clearly a very big disappointment. The stock has really underperformed, despite the fact that it has all its ingredients of being a very good company. The fundamentals are good, the pedigree is very good, it's a very strong management, and they are into entire gamut of financial services doing well, but then the stock has not done well, and that has to do partly to do with the kind of problems which are being faced by NBFCs across the board. But I think from here on, we could see substantial upside in the coming years. Since the investor is there for long term, I think he should continue to hold on to the stock. I would even recommend him to average his acquisition cost by buying some quantity at the current levels and then sitting it out for the say next 1.5 to 2 years, where I feel we could see the stock doubling from the current levels.
Okay. On that note, we move on to a question from Vigeen, and he wants to know what can be done with future retail and future consumer. Well, some very interesting stocks picked up out here. He wants a fundamental view here. Let's pull up future retail and future consumer and take a look at where they're currently trading at and the kind of movement that they've seen perhaps over the previous few months. So future retail is at 431. And for now, among the latest, in terms of information, we understand is that Amazon for now has put on hold their plans to buy at least a certain stake in both future retail and future consumer. Of course, future consumer is a consumption arm of the group at around 45. Vikas, do you hold a view on any of these or both of these for that matter? What would you advise the viewer to do with this?
Yeah, both the stocks are that way good quality stocks, and I would recommend a hold on them. As far as future retail is concerned, their deal with Amazon, if that would have happened, I think the stock would have certainly gone up substantially. But then I think the recent policy changes by the government has deterred Amazon from buying into the stock. But then I think the deal could materialize in the months to come. So, and furthermore, I feel retail as a sector is doing well, and future retail would be one of the good stocks to bet on the retail boom which is expected in our country. So I feel future retail and future consumers both could be held on to at the current levels.
Okay, all right. Hold, that's the view coming in there. We have a question on Yes Bank now. This is actually to do with a certain call option. But we're going to take a look at how Yes Bank is currently trading. It's at 216. It's up 1.5%. The question from Harshvardhan is that he has bought the... I'm sorry, I'm going to talk about Axis Bank. Pardon me, I've got the bank's name wrong. If we can pull up Axis Bank now and take a look at where that's currently trading at, because that's around 700 rupees per share. Now, Harshvardhan has bought a 710 call. And and he wants to know what can be done or whether or not it is actually possible for Axis Bank to go in the money, thereby which he can possibly make a higher profit. It's currently trading at a premium of 8. But Mr. Fidai, let me just talk to you about Axis Bank in general with its underlying currently at 700. And the gentleman has bought a 710 call. Do you think an further up move is possible?
Well, currently 710 is actually acting as a resistance right now. So anything below 680 would be more painful for the viewer. Yeah. Rather, if it crosses 710, basically that would be a crucial point on technical levels right now. Overall, the stock is very bullish on long-term charts. I have already said that on earlier shows also. So what I believe is rather than trading in call and option, the person could actually buy small quantities and do a sipping on the stock. Because this stock has a very good potential. It has already given a breakout and has come back to retest this area. Yeah. So if he goes long and if he can keep a stop loss below 660 would be the best way to go for a better returns over a period of time. But if it's just a trading purposes, then he needs to make sure that he keeps a very strict stop loss on a spot basis at around 680. If the stock starts trading below 680, I think his call option money premium will go to 0. All
right. Okay. Fair enough.
Because we have very limited time on hand.
Absolutely. Yes. We in fact next week is expiry, so this is when time decay really starts picking in, even if the stock remains exactly where it is. But pardon me. Moving on to a question from Imran Momin, and his question is actually on a bunch of stocks, but Imran, again, I cannot take all your stocks, so I'm just going to take 2. I will consider at this point in time one stock which is doing not so well is Reliance Power. and the other one will be Jubilant Foodworks. Vikas, come in on both of them. Of course, Reliance Power is really under pressure. It's, there is temptation for a lot of these investors to move in on some of those stocks which have corrected quite substantially. So if you could come in on whether or not it actually makes sense to buy Reliance Power at this point in time, considering the sharp decline. And secondly, what you think of Jubilant Foodworks as well, which is on the other end of the spectrum in a relatively more fundamental stability.
Yeah, true. As far as Reliance Power is concerned, I would recommend an avoid on the stock. I think the entire ADAG group is going through tremendous pressure, and unless things improve, these stocks will not generate any kind of returns for investors. You might be, if you're a good trader, you might look at opportunities or keep your eyes on news flows and then trade on these stocks. But from a fundamental point of view, investment in these stocks will not be recommended. And as far as Jubilant Foodworks is concerned, it's a good quality company. I'm bullish on the quick service restaurants, this space, and the stock has done well. But recently there were some issues as far as the promoters wanted royalty for the use of the name of Jubilant, and that had led to a correction in the stock. But then they rectified the mistake, and after that we are seeing the stock stabilizing at the current levels. But I remain bullish on the stock from a fundamental point of view, from an operational point of view, and I would recommend a hold on the stock at the current levels, and the stock even can be bought on declines.
All right, so Jubilant Foodworks can be bought on declines, but avoid the ADAG group stocks at this point in time, which are all reeling under a lot of pressure owing to, well, several issues that the company has had. But moving on to a question from Ramanuj Jhavar, and his question is on Viny Organics. Now, Ramanuj has not mentioned whether or not he wants a technical or a fundamental view, and this is a stock that we don't usually talk about so often, so I'm going to take both in this case. And well, let me go to Mr. Fidai first. Mr. Fidai, there's been a little bit of consolidation in Viny Organics. I would say around 1600 over the past few days. Yeah. How are you seeing trade now?
Like stock is looking very good on the technical terms. It is making a triangle. It's a consolidation pattern. The best thing is it is not trading it is making sure that it does not go below 50 DEMA. Yeah. So that shows quite a strength in the the counter, and person can hold it and keep a stop loss below 1540 on the downside, and on the upside, if it crosses 1700, there could be more momentum upside. Right. So if he wants to go for a momentum trade, or if he's holding it, probably can add more above 1700 to his recent positions. Okay. And maybe trade on for probably a target of 1900, 1950. Okay. And on the downside, let's say if it breaks 1540 or 1530, then it can come down and become attractive around 1350. That would be 200 DEMA. Okay. To probably accumulate over there. Okay. All right. Fair enough. So those are the levels that you can watch out for on Viny Organics on a technical basis. But Vikas, what is your fundamental view on Viny Organics?
Yeah, I would share similar views. I think it's a good quality company. The stock has done well. It's off from its recent highs, but I think at the current levels, an investor should continue to hold on to the stock, and it could be bought on declines. I think we could see a 20% upside in the next 1 year on the stock. Okay.
Okay, we move on to the next question from Shankar Azmira, and he wants to know, he wants to get views on two companies. They seem from a long-term perspective, considering he's talking about 3 years. So, Vikas, the two companies are Som Distilleries and Everest Industries. Do you track either or both of these companies? If you could offer your views here.
Sorry, as far as Som Distilleries is concerned, I do not track the stock, but Everest Industries I do track. It's a good quality company, and I'm extremely bullish on the entire segment of building material. And I think with the recent budget and with expectations today also of a cut in GST for under construction houses, and with the focus which the government has on affordable housing and real estate, I think most of the building material companies would do well. So I'm bullish on Everest Industries from the current levels, and I would recommend a buy on this stock at the current levels.
And on that note, we're going to head into our rapid fire segment. Well, this is where I would request our experts to keep their answers as short as possible so as to accommodate as many queries as possible. And well, the first query comes from Vishnu from Bangalore. He says he's bought shares of Jagran Prakashan at 113. What should he do at this point in time? Let's pull up Jagran Prakashan. It's currently at 93 rupees per share, so 10 rupees below his entry price at this point. Oh, pardon me, it's actually 20 rupees below his entry price. Mr. Fidai, what can be done with this one?
Like, I wouldn't be buying this stock anywhere right now. So he has bought it actually at a very wrong time when it gave a breakdown actually.
Right.
So rather, like, if he sees a jump in the stock to 105, he should exit with a nominal loss. But if it breaks 90, then he should get out absolutely from this counter.
Okay. All right.
There is quite a big downside on monthly charts also.
All right. Okay. There is a big downside. So, well, there you have it. That's a view on Jagran Prakashan. Moving on to the next one from Akshay Dev. He's bought shares of graphite at 436. He wants to hold them for 5 years. Under considerable pressure, but well, not too far away from current market levels. Vikas, would you recommend to hold on to Graphite India with a 5-year perspective?
I think he can hold on to the stock. He's bought it at a pretty good price, and although the stock has come down sharply, but then he's not incurring huge losses. And the company is good, and I think in the next 5 years it would certainly give him good returns. So I would recommend a hold on the stock.
All right, Vikas, one more for you. SML Isuzu, Tejeshwar wants to know, wants to get a long-term view on SML Isuzu, bought at 1,200 rupees per share. It's currently trading at half the value, less than half actually.
Again, at the current levels, I would recommend a hold. Most of the auto companies have corrected sharply, but from the current levels, I think they would do better. So I'm not sure whether he'll be able to recoup his prices, but then from here on, I think we could see some upside. So I would recommend a hold on the stock.
All right, I guess we've run out of time on this show, so I'm going to take a moment to thank both our experts, Mr. Fidai and Vikas, for helping our viewers with all their queries. That is all that we have on this edition of Ask BQ, but remember, we're just a tweet, post or a call away, so keep your queries coming in. We promise to address all of them through our shows. You can also log on to our BloombergQueen.com to search for the Ask BQ hashtag, and we get you all the answers. Up next is Power Lunch. Stay tuned in.